Insider trading. Sonia is a team leader at Tata Capital Financial Services Limited. She, on account of her business role, is aware about a takeover that a listed company, ABC Corporation, is planning to do shortly. This information is confidential and only a select few employees are aware about it. Sonia calls her stockbroker to buy a large quantity of shares, knowing that the price of the shares will go up. Since Sonia knows that this information is confidential, she is ideally not allowed to trade in the securities, but she willfully decides to take advantage of this unpublished price-sensitive information. Dealing in this, she has violated the rules set forth by Sebi, the Securities and Exchange Board of India. Her belief that the trade happening through a broker outside of the firm makes it a safe haven to earn a quick buck is in violation of both the Tata Code of Conduct as well as the Prevention of Insider Trading rules set forth by Sebi. Sonia is now liable for prosecution under the applicable laws. Do you think it was right on her part to call her broker and make a transaction? What is insider trading? Trading in securities when in possession of unpublished information which, if published, would impact the price of securities in the market. Such trading affects the integrity of the market and investors being deprived of an informed investment or divestment decision. To avoid any insiders to take benefit of trading in securities while in possession of unpublished price-sensitive information, the Securities and Exchange Board of India, SEBI, has formulated the SEBI Prohibition of Insider Trading regulations. Penalty for violation. Under Section 15G of the SEBI Act, any insider who indulges in insider trading in contravention of Regulation 3 is liable to a penalty which shall not be less than Rs. 10 lakhs but which may extend to 25 crore or 3 times the amount of profits made out of insider trading, whichever is higher. Under Section 24 of the SEBI Act, anyone who contravenes the regulations is punishable with imprisonment for a maximum period of 10 years or with fine which may extend to Rs 25 crores or with both. Tata Capital adopting the Insider Trading Code. Tata Capital Limited, TCL, and its subsidiaries adopted the policy in 2015. We are governed by the regulations set forth by SEBI since we are listed entities, listed, financial intermediaries, hence in possession of unpublished price-sensitive information, UPSI, of other listed entities. Tata Securities is a depository participant. CFOs, Chief Financial Officer, of each entity is designated compliance officer. Designated person, DP. Employees including the directors and promoters who might have access to UPSI due to their role or function are termed as designated person. Also covers immediate relative, spouse and parent, sibling, and child if dependent, and material financial relationship. In the earlier example, Sonia was a designated person. There are certain obligations on being a designated person. Initial disclosures for self, relative, and material relation to be done within 7 days of being identified as a designated person. Annual disclosures for self, relative, material relation, to be done on or before 15th of April each year. UPSI database. The regulation requires maintaining a system for recording and sharing of UPSI with connected persons. This includes UPSI for main company Tata Capital Limited and other listed companies where TCL is a financial intermediary. Designated persons need to update the details of connected persons with whom the UPSI has been shared along with reference about the legitimate purpose, within 2 working days of information release. Let us look at some examples of unpublished price-sensitive information. Strategic information like a major change in capital structure, mergers or demergers, acquisitions, delisting, disposals or expansion of business, or even getting private equity investment. Another example would be sharing of financial information like financial results during trading window closure or details about financial plan or business plan or possible dividend payout. It could also be information like issue of public non-convertible debentures or other borrowings, credit ratings, change in management or a major fraud. Pre-deal approval and deal status confirmation. In the last example, we saw that Sonia was in possession of unpublished price-sensitive information on account of her job role. Let us look at how a designated person is supposed to handle a situation like that. If a designated person is in possession of UPSI, he or she is not allowed to trade. Otherwise, being a designated person, Sonia cannot trade in her own entity, Dado Capital Limited, when the trading window is closed. In case Sonia is trading with any listed entity including TCL, for a value over Rs 10 lakhs per security per year, buying or selling, she will need to apply for pre-clearance. Once she has obtained her pre-clearance, she needs to ensure that the trade is completed within 7 trading days. It is her obligation to disclose the trade to the compliance officer or on the online tool, both about execution of the trade within 2 days from the trade day or non-execution within 2 days from the trade window.